So Bitcoin is suddenly back above 73k, and the reason might surprise you. Institutional money is flooding back into crypto. One of the biggest asset managers in the world has just launched new Ethereum ETFs that actually include staking rewards. Meanwhile, activity on the XRP network is exploding, and Europe may soon integrate the blockchain into traditional finance systems. But here's the thing. Despite the rally, the market is sitting in fear territory right now, and the next macro catalyst is only days away. So today we're breaking down why Bitcoin just bounced above 73k, the massive institutional moves happening behind the scenes, the Ethereum ETF development that Wall Street is watching very closely, the surprise surge in XRP network activity, and the macro event that could decide where crypto goes next. So let's dive in. So Bitcoin just reminded the market who's in charge. Over the last 24 hours, Bitcoin pushed towards $73,700, gaining roughly 4 or 5% in a strong relief rally. According to market coverage from The Block, the move is being supported by a return of spot ETF inflows, which are once again acting as a price floor for the market. In fact, analysts say that the rally looks like a classic institutional accumulation phase, and here's why. Crypto markets recently went through a short-term correction, retail sentiment dropped, and fear indicators climbed. But while retail hesitated, institutions started buying again. Reports show that Bitcoin ETFs pulled in roughly $767 million in inflows last week, while one fund alone accounting for the majority of the capital. And that fund? BlackRock's Bitcoin ETF. And this is where things get quite interesting, because this isn't just about price, it's about market structure. Right now, Bitcoin appears to be forming a consolidation band between roughly $68,000 and $75,000. If Bitcoin breaks above the upper range, the next major liquidity zone sits up towards the 80k level. But if the support fails, we could see ourselves heading back down towards 60k. However, something else is happening behind the scenes that could shift the entire market narrative, and that is institutions that are quietly loading up. While retail traders debate the next move, institutional investors are steadily increasing their exposure. Recent data shows that BlackRock's Bitcoin ETF absorbed around 600 million in inflows during the past week, making it the most dominant source of institutional demand at the moment. And this matters profoundly, because ETFs have fundamentally changed how Bitcoin trades. Instead of relying on crypto exchanges, Bitcoin is now integrated into traditional finance markets, meaning pension funds, hedge funds, and wealth managers can buy exposure with a single click. Analysts say this is helping create a structural demand floor for the asset. As one market analyst noted, institutional adoption is increasingly acting as a stabilizing force for Bitcoin prices. In other words, even during short-term pullbacks, large players keep buying, and historically, that's been one of the strongest signals for the next leg of the bull market. But Bitcoin isn't the only asset attracting institutional attention, because the next big development is happening with Ethereum. Ethereum may have just crossed a major milestone, and it's already generating huge attention in Wall Street. And why is this such a big deal? Because traditional Ethereum ETFs typically track the price of Ethereum. But this new structure allows investors to potentially gain exposure towards staked rewards, essentially earning yield while holding the asset. According to reports, the ETF saw strong trading momentum immediately after launch, highlighting growing institutional demand for Ethereum exposure. And this changes the investment thesis. Instead of just being a speculative asset, Ethereum now starts to resemble a yield-generating digital bond, and that narrative could be extremely attractive to large investors. Think about it. If institutions can hold Ethereum, earn yield through staking, and do it all inside a regulated ETF structure, that dramatically lowers the barrier to entry. And if that demand continues growing, Ethereum could become one of the biggest beneficiaries of institutional capital in this cycle. But Ethereum isn't the only altcoin seeing interesting developments right now, because XRP is suddenly back in the spotlight. While Bitcoin and Ethereum dominate the headlines, the XRP ecosystem is quietly experiencing a surge in activity. According to new data, transactions on the XRP ledger have tripled over the past year, with peaks reaching nearly 3 million daily transactions, and that is a massive jump. Even the average daily activity has climbed to around 1.3 million transactions, and that growth could be tied to a much bigger development, because European regulators are exploring the possibility of integrating tokenized securities as collateral, with blockchain infrastructure potentially playing a role. In other words, traditional finance assets could soon interact directly with blockchain networks. And if that infrastructure uses XRP ledger technology, it could significantly expand the network's real use case. Now, the markets haven't fully priced this in yet, in my opinion, but the surge in transaction volume suggests something is happening behind the scenes, and if adoption continues rising, XRP could become one of the most closely watched assets in the coming months. But crypto markets don't move in isolation, of course, because the next major catalyst isn't actually coming from crypto at all. It's coming from the macro economy. Right now, the entire market is watching one major event, the next Federal Reserve decision. Interest rates still play a massive role in crypto markets, as we know. Higher rates generally pull liquidity away from risk assets like Bitcoin, and lower rates tend to push capital back into them. And right now, investors are trying to figure out what the Fed will do next. Add in the geopolitical uncertainty and inflation concerns we've seen recently, and you get a market environment where macro headlines can move billions of dollars in minutes. But interestingly, Bitcoin has recently started showing signs of decoupling from traditional assets, at least in the short term. Some analysts say institutional demand is beginning to create a separate liquidity cycle for crypto. And if that trend continues, Bitcoin could start behaving more like digital gold than a tech stock. And that would be a major shift in how global investors view crypto. But before we wrap up, there's one more signal that's worth paying attention to. And right now, the crypto market is sitting in a fascinating position, in my opinion. On the one hand, institutional adoption is accelerating, ETF inflows are returning, and new financial products are launching. But on the other hand, retail sentiment is still pretty cautious. Many traders are waiting for confirmation before jumping back in. And this creates a classic market dynamic. Smart money accumulates while retail waits. Historically, some of the biggest bull runs have started in this exact environment. In fact, some analysts believe the next major Bitcoin cycle could push prices significantly higher if institutional demand continues growing. One recent outlook suggested that strong inflows could eventually push Bitcoin towards six-figure territory again, potentially above $120,000 during the next phase of the cycle. Of course, predictions are just predictions, but the underlying trend is pretty clear. Crypto is becoming increasingly integrated in the global finance system. So, let's zoom out. Right now, the crypto market is being shaped by three major forces. First, institutional capital is accelerating. ETFs are bringing billions and billions of dollars into the system. Second, infrastructure is expanding. Ethereum staking products, tokenized assets, and blockchain-based finance systems are moving closer to mainstream adoption. And third, macro conditions really matter right now. Interest rates, liquidity, and geopolitics will continue influencing market cycles. But if the current trend continues, crypto may be entering a new phase. Not just speculation, but integration into the global finance system. And that shift could define the next decade of this industry. Now I'm curious, do you think Bitcoin breaks 80k first, or do we see another correction to 60k before the next major rally? Let me know in the comments down below. And if you enjoyed this breakdown, don't forget to subscribe, because the next few months in crypto are going to get very interesting.